Episode 3. Equilibrium. The only price that actually matters. If there's one word traders use all the time without really understanding it, it's equilibrium. Most people think equilibrium is just the middle of a range, or a moving average, or fair value, or a place price might bounce. None of that is wrong, but all of it is incomplete. Equilibrium isn't a level you trade. It's the reference point the entire auction rotates around. Equilibrium is where the most agreement has happened over time. Not in one session, not on one candle, across many completed auctions. It's where business was done efficiently, where buyers and sellers were both active, where neither side had urgency. That's why price is drawn back to it. Not because it's magical, not because it's technical, but because that's where trade actually works. Here's the part most traders miss. Price doesn't leave equilibrium because it wants to trend. It leaves equilibrium to test imbalance. Every move away from equilibrium is a question. Is there a better price to do business? Sometimes the answer is yes, and price continues. Sometimes the answer is no, and price snaps back hard. That snapback isn't manipulation. It's rejection. Rotation is the default state of the market. Read that again. Rotation is normal. Expansion is rare. Most of the time, price is rotating around equilibrium. Testing, stalling, resetting. If you treat every move like a trend, you'll overtrade. You'll enter late. You'll fade the wrong levels. And you'll miss the actual opportunity. Harmonia starts with a different assumption. Rotation first, continuation second. That's why equilibrium is not an entry. At equilibrium, momentum dies. Direction becomes unclear. Trades stall. If you're entering at equilibrium, you're betting on nothing. That's why Harmonia labels EQ as a rotation target, not an entry point. It's where profits are taken, where trades reset, where structure rebuilds. It's the center of gravity, not the edge of opportunity. Real opportunity lives away from equilibrium, in early probes, in acceptance zones, and at extremes where continuation fails. That's why Harmonia doesn't start at 50% or 80%. It starts at 20%, because that's where the auction first shows intent. This is also why both mean reversion traders and trend traders get confused. Mean reversion traders fade too early. Trend traders chase too late. Both ignore the same thing: acceptance. Without acceptance, trends fail. Reversals don't hold. And setups look perfect. And still lose. Equilibrium tells you where price wants to return. Acceptance tells you whether it's allowed to leave. Now you understand where the market balances. The next question becomes critical. How do you know when balance is actually breaking? Not guessing. Not hoping. Not reacting after the move. In the next episode, we're going to introduce the 20% zone, the first place the auction reveals real intent, and why most meaningful trades begin there, not at the extremes.